How can I plan for student loans while in college? Are you wondering how to effectively plan for student loans while you are in college? You are not alone. Many students face this challenge, and having a solid plan can make a big difference. Let's break down some practical steps to help you navigate this journey. First, it is essential to understand the different types of student loans available. Federal loans are offered by the United States government and typically have lower interest rates. They come with flexible repayment options. Within federal loans, there are subsidized loans, where the government pays the interest while you are in school. This means your loan balance does not grow during that time. On the other hand, unsubsidized loans start accruing interest as soon as you borrow. You can choose to pay the interest while in school or let it add to your total loan amount. There are also PLUS loans, which parents can take out to help cover education costs. Private loans are another option, but they are offered by banks or credit unions and often depend on your credit score. These loans may have variable interest rates and usually lack the flexible repayment options that federal loans provide. Before you consider borrowing, it is wise to research and apply for scholarships and grants. These funds do not need to be repaid and can significantly reduce the amount you need to borrow. Many scholarships are available based on academics, sports, community service, or unique talents. Applying early and often can help you secure more funding. Once you receive your college acceptance, you will get a financial aid award letter. This letter lists all the aid offered, including loans, grants, and scholarships. Take the time to review this letter carefully. Understand the terms and conditions of each part, especially the loans, so you know what you are accepting. When it comes to borrowing, only take what you truly need. It can be tempting to borrow the full amount offered, but remember that loans must be paid back with interest. Create a budget to estimate your college expenses and try to borrow only enough to cover what you cannot pay through savings, work, or other aid. Keep track of your loans each year. Knowing how much you borrow and the total amount you owe will help you avoid taking on more debt than you can handle after graduation. Using online tools to estimate future loan payments can also be beneficial. Many websites offer calculators that show what your monthly payments might be after you graduate. This can help you understand the long-term impact of borrowing and motivate you to borrow responsibly. If you have unsubsidized loans, consider making interest payments while you are still in college. This can prevent your loan balance from growing, reducing the total amount you will owe later. Stay informed about repayment options after graduation. Federal loans offer flexible repayment plans based on your income. Knowing these options ahead of time can help you manage payments effectively and reduce stress. Lastly, if your financial situation changes or you have questions about loans, do not hesitate to communicate with your college's financial aid office. They can provide guidance and help you explore additional aid or alternative borrowing options. By following these steps, you can plan your student loans wisely, minimize debt, and set yourself up for financial stability during and after college.